Welcome to the lounge and the Indices report, and I want to start with the Australian market to start with, but just before I do that, there's a couple of announcements this week that are important, and you're probably aware of the ECB's QE, which will come out on Thursday. There's speculation on how much they will place into the system. The ECB are normally quite conservative and they normally move in increments. However, the catalyst for a larger amount of money going into the system would be the Swiss bank, the SNB, unpegging from the euro. So obviously they've had some sort of heads up from the ECB in the back rooms. So they might surprise us and put some money into the system, which will place the equity markets higher. So that will be the Thursday event. So just be very mindful of that. Today we've got some GDP figures coming out from China, which can have reasonable, intraday impact. But the main event, other than the ECB, will be China's flash manufacturing figures coming out on Friday. I think that's at 12:45 or 1 p.m. Australian time. So that will be the headline catalyst for that particular point there. Into the Australian market here, we're going to be looking at a bullish count, but I also want to look at this particular monthly chart here in terms of, as you can see here, it's just a simple it's the market working across the 5,000 level. It's an overshoot pattern. The distance above is normally the distance below. There's only 100 points difference on the cash market, and we'd be looking at this as an A wave, a B wave here, pulling back up. Well, not quite to the just above the 61.8 retracement level here as wave B in a nice three-wave structure here, and then wave C moving down through to here. So this is quite possible. We've had it here for a long time, and we've just been watching it, and we'll still watch it. But there will be certain points within the structure if it moves down here where we can confirm this particular move down through here, as sort of sad and as frightening as it may be here. We do need to keep it on the table, and hopefully we don't have to see this, and we can see the support on the 5,000, retesting the 5,000 and moving up here. But if this 5,000 becomes the retested resistance, then you would need to adjust portfolios as such. But just looking at this is on the monthly chart here. And let's just look at this on the weekly chart here. I'm calling it a regressive count because that's the correct terminology for it. It's not a progressive, it's a regressive count because it's a corrective move. Even this whole move up through here is really, as a wave B, would see this as a bear market rally, which would be a progressive count to the upside, but at the same time it would be a regressive, so it would be a pro-regressive count to the upside. That's the correct terminology, and I thought that I might start using that this year here as well. Now the top here as the primary wave B here would see 5 waves down of intermediate degree of 1, 2 here, 3, 4, and 5 for wave C. Now, this first move down through here counts very nicely as an impulse wave to the downside. And we can look at this as being an A wave and a B wave and a C wave of minor degree for intermediate wave 2, and then this market continuing to move down. So if it does move down, at least we know where we are, and we know that we'd be looking at a much bigger picture to the downside as well, and we can take the necessary course of action within that. And I would like to just look at this once again on a daily chart here, just to put it in perspective a little bit, because it's quite a nice count really. We do have a clean 5 waves down here for wave 1, and then we have all of this as an A wave, a B wave here, and it counts quite nicely as an A and a B and a C here, and then it counts quite nicely for 5 waves up here as well for wave C. So I must say that it's very fitting. So if this low here gets taken out, if this low here gets taken out, then that confirms that we will be moving lower from that point and into that bigger picture. The 5-2's always been this is group 1, 100, 200, 300. If the 200, number 2, if the pivot here, as I call it, becomes the retested resistance, then it's normally doomed at that stage and will be pulled down lower. Yes, it did move down through here, but on the retest, it never failed any retest here. It was just a straight bounce back up, and the same for here as well. But if it locks under that 2 there, generally speaking, it will be doomed and it will be pulled down from that point there. So that's something that we need to look at. However, at this stage here too, there is a positive count to all of this as well, and the positive count would be the move coming down here as an A wave, a B wave and a C wave, a 3-wave correction in a bullish market, and then looking at wave 1 moving up here. So if I've got that here somewhere, here, so we can look at, I'll just go back here just so you sort of clean. So we're looking on a bullish pattern here. We'll look at this as an A wave, a B wave and a C wave here, then wave 1 up to here, wave 2 here, and then we should see a very strong move for wave 3 to move up here. Wave 3 here, if that's going to be the case, it will be longer and stronger than wave 1 here. Okay, so we've got now we're going to have a look at this little picture here on a different chart here, on this daily 8-hour chart here, and this counts, as I mentioned, up here as 5 waves, which could be the C wave, but in this case we'll call it wave 1, and then we'd be looking for a wave 2 to come back in 3 waves as a ABC correction to the 61.8 retracement levels. So it's looking quite good as a bullish picture, okay? So we're back at the 61.8, that's all good. And we'd be looking at this move up through to here. I'll just see if I've got... The reason that I like this count here, the main reason I like it, is because this wave A here is in 3 waves, which makes the whole thing corrective here. Makes all of this pattern here corrective as an A and a B and a C. So, yes, in bullish terms, we're looking at, this low's got to stay in place at this point here. If this low here gets taken out, then we're also in a bearish mode from that point there. So be mindful of just that little point there. Let's just drill into this a little bit further here. So this is the pattern that we're looking at, the up for wave 1 here, from up here. And you can see that this is the one that makes me think that we could be in a bullish mode here, because it's in 3 waves all through here. Yes, you could squeeze 5 waves out of it in terms of down for 1, an A and a B and a C, back for wave 2, and then 1 and 2 and 3 and 4 and 5 to this little point here as wave 3, then 4, and then wave 5 to here. So it can be squeezed in there. So I am mindful. This move down through here as well is reasonable as a wave C here in 5 waves for wave C of 2. This move up here is in 5 waves. It can be counted as 5 waves. It looks fine. But this low's got to stay in place here. So this sharp move down through here, obviously the US markets were closed last night for Luther King Day, so low on volume and so forth, so we need to see how this picks up a bit. Monday was bullish, Friday was bullish, Monday was bullish, so it means Tuesday morning is profit taking with the trend resuming in the afternoon. Wednesday would be a V-shaped day, a deeper V-shaped day. Thursday, the bearish day, and then next Friday and Monday to the upside. So that would be the bullish weekly cycle. But this low here needs to stay in place here. That's the main point of this whole exercise, going through from the regressive count to this progressive count here. So it does sort of hinge on this point here. If you're going to go long here, then 53. I mean, this is quite a nice support here too, because it's nice in the way that it's the top of group 1, so 100, 200 and 300. So it is a retest of group 1 here, and that is really significant in terms of, well, this degree of structure that we're looking at. So we can be pushing. If we do push up through here, it will move up. It will move up sharply, so don't hesitate at that point if you see it moving, okay? If it takes out the bottom here, then we'll reassess what that means for the count to the downside. Okay, so just moving into the other markets here as such. The S&P 500, this is just the weekly chart here. Now, I'm not clear on what's happening here, okay? So in one regard, we're at the level 2000 here, which is a major trading level, okay? So we can expect this market not to go far at all as such. We would expect a larger correction in this area through here. And the question that I have here is that, is wave 5 of 3 completed right now, and we'll be moving down for wave 4, then wave 5 to the upside, and then we'll have a much larger correction after that there, because we're looking at some pretty big figures here. This is primary degree here in light blue. This is cycle here, and we're looking at super cycle at this point here. But the main point is that I will be looking through a lot of US stocks now that I'm back on board, and I should be able to work out what will be pushing up and what not, because basically the stocks will control the indices as such. So I'm not sure if this is coming back here again. I'm not sure if this wave 5 of 3 is done, or we're going to be moving up through here. And this wouldn't surprise me moving up here further into the 2150 area here. And if it does that, we would be looking at it to do that in an ending diagonal triangle. Okay, now just moving into the daily chart here. So we've got a situation here that this top can be in play here, and we'd be looking at this as an A and a B and a C moving back down to the 4th wave of 1 lesser degree. But otherwise, we'll be looking for a move up here to complete not this one 5 of 3, but this 5 of 3 here, and it would be an ending diagonal triangle moving up. Now, it would also have to, at this point in time, it would also have to stay under this, it would have to stay above this current low here in the meantime here as well, because this move down through here in 3 waves here, we would need to, this would need to stay here and move up from that point there, okay? So it's really only if it takes this low out here that we'd be looking at this point down through to here, and we'll be assessing it from that point there. But otherwise, the DAX and the European, the DAX and the FTSE appear to be moving up. This can very well move up here as well. So just moving into this 4-hour chart here, don't have this labeled here, but this would be the A wave, the B wave, and the C wave that we've been looking at over the Christmas break here. And this C wave here would be in 5 waves. I grant you it's not a very nice looking 5 waves. It's very spiky and choppy and overlapping and so forth, but it is fitting. And the little move up through here appears to be in 5 waves as well as an impulse wave. So we would be looking at this as a little 5 wave structure, little retest of the 2000 here roughly, and then a move up through here. And obviously moving up further from that point there. Obviously they're on holidays at the moment, but that's what we'd be looking for when we come back. So it is drawn out here a little bit better here in terms of, well, an A wave, a B wave, and a rough looking C wave here. You could probably get a better picture of this on the cash market, the physical market. But as long as this low here stays in place, the direction is up, and the earnings season has started. I think there's been 33 companies that have reported so far. They have met expectations and even more. The expectations are low, by the way, but it's just where what the Americans are like. It's got to be positive, so lowering the bar makes it positive. But our point in trading is this lows needs to stay in place here, and we'll be doing updates on this particular little structure through here as we go. The Dow Jones is much the same as well. This is a monthly chart here, and I've just drawn up here the primary wave 1, primary wave 2, intermediate 1, 2, 3, 4, and 5 here. This top here, is it in play here? I just don't know. We're at 18. 8 is a profit-taking number. We've seen some profit-taking. These two here are medium levels here, 15,000, 16,500 here. So, yeah, it's just drilling here a little bit further here. If we do have a top in play here, then we'd expect the market to come back into the fourth wave of 1 lesser degree through here, basically across the medium level through here at 1650 and 15 here. It's, weeks. Our target was 18,000, minor trading level 8. We knew that there would be profit taking. It's there. We could call this the arrival, the reaction, the first high above the level, and then back again. So we could be looking at this also moving up here as well, in line with the DAX in an ending diagonal triangle here as well. Just drilling in here a little bit further through here. This is what it would be looking at here. If we were going to go higher, this is the way that it would look here as well, in terms same as the S&P 500, the A wave, the B wave, the C wave here, up for 1 in here, back for 2, and so forth, moving up through here. So it's really a matter of seeing strength come into the market by strength, but this is critical, this little point down through here. So be mindful of that, and we will be doing some more work on this once the US comes back online. The European indices, starting with the DAX here, and once again just on the monthly chart here as well. The main point here is that, well, we could look at, I won't go into this particular, don't worry too much about this here, because this could also be wave B here and wave C here. But what is important here is primary wave 1 here on the monthly, back into 5,000 for wave 2 here, and then counting 5 waves up through here, which is not complete. We've got intermediate wave 4 here, and we're looking for intermediate wave 5 up through here. So we're looking at the arrival at 10,000, which is our target, the reaction, and then we're looking for the first high above the level. The first high above the level normally comes in 5 waves, and that's what we're looking for at the moment. However, in that 5 waves moving up through here, it can also be counted as an ending diagonal triangle, and that's because of some of the internal structures that we're looking at. But we are either way that you look at it, we're looking for it to move up, and the 11,000 would be a nice mark for that, or the 11,500, which would be the next medium level through here. But the main point is that we are looking for it higher, and of course the ECB, with their cash injection for the QE, who knows what they'll put in. As I mentioned, they always move in increments, or they try to use words to make a market positive. However, the Swiss doing and the SNB doing what they've done in unpegging their currency must have got heads up from inside the ECB of what's actually going to happen. So I'm taking that as a catalyst that will help drive this market higher, and we can just drill in here now. Somewhat, this particular move up here I've got labelled as 1, can be labelled as wave A here, and wave 2 here as B wave, and that would be part of the ending diagonal triangle. The thing with an ending diagonal triangle, if I can just explain that here, perhaps like this here, it is a triangle to the upside like this, and the progressive waves to the upside are normally in 3 waves. They'll have 3 wave counter trends. They'll also move up in 3 wave patterns like this. They will have 5 waves, but they will move up in 3 waves rather than 5 waves. So that's what we're sort of looking at in this picture here, so to speak, and into here. Yeah, so this is where we are here at the moment. If we can just drill in here for a bit more here. I've still got this labeled 1 here where it can be a larger A wave here. I think the main point though is most people look to trade these indices short term, so we'll just move in on the short term process here. We can look at this as, once again, in the 3 waves that I was talking about to the upside just then. There's an A and a B and a C wave up to here, and then have a 3-wave correction, and then another 3 waves up as well. So all in 3 waves to the upside. But the main point here is that this has still got further to move to the upside. I'll just see if I've done more work in here. Yes, that's good. So in tracking this up here, just on the hourly 2-hour chart, we're looking at all of the little bit scruffy this move through here, but the best fit that I can see is wave 1 to here, wave 2 to here, and then we're looking for wave 3 up through to here. These are moved around when you open and close the program a bit. They sort of move around, but as the markets do. But yeah, so we're looking for this point here in terms of 1, 2, looking for a 3rd wave up through to here, come back and testing here for 4th, and then up for 5 here. How far that will go up, I don't know, because it's going to be headline driven. One of the points we can look for here is group 1, so 1, 2 and 3 here, so support on top of this here. There'll be a fair bit of wriggling here. It's got the arrival, the reaction, the first high above the level, and then it can come back to number 2 here, the pivot again, 10,200, and then find support there as well. So it could be a little bit choppy here. So you would need to less contracts, wider stop. That's the safest route to the upside. Okay, the FTSE. Okay, just starting on the monthly chart, just good to have a look at the bigger picture on all these sorts of things. So looking for wave 5 to the upside to complete this 5-wave structure from this move. This is the medium level here. It's been a very important level, the 6,500, number 65. And the market's working through that and trying to get support here. We can see that it's struggled all the way up here, and then it's dropped here, and then we're looking for it. If it can gain support back up here the next time round, well, then we can look at these tops being taken out, and that would fit the wave count that we have here. So we have 5 minor waves up here. Orange is minor waves, 4 intermediate wave 1, intermediate wave 2, and then 1, 2, 3, 4, and 5 for the 3rd wave. The 4th wave pulling back to the 4th wave of 1 lesser degree here, and then the 5th wave up through to here. Normally, it's a little bit sort of, we're not really seeing a strong extension in wave 3 here in this move up here. So normally there's an extension in the wave structure. So it does appear that wave 1 is the sort of extension here. But let me just check this. It's got me sort of thinking a little bit now, because my thinking is that just roughly pretty close, because normally there's an extension in one of the structures. So if wave 1 and wave 3 are the same size, then we can expect an extension in wave 5. So we could put this up through here, but we won't do that just yet. But the normal thing is, I would need to check the volumes on this. But once you get to under primary level, then I need to read the volume different than I would if we were above primary structure, and we're in intermediate structure and intermediate and primary structure here. So it just takes a little bit more a different approach as such. But anyway, let's just drill in here for the time being. That's enough waffling there. Main point here for me is that we've got, well, 2 points. We've got 65, we're above 65, 6,500. That's a medium level. That's a very positive sign through here. Once again, we're looking at wave 3 here. This down as an A wave, a B wave, and a C wave to this point here. Then wave 1 to the upside, wave 2 here. So we're looking for wave 3 here. So this wave 3 will be in line with the ECB pumping money into their system here. So just drilling in there a little bit further. kind of, we can see wave 1 and 2 here looking a little bit better here. And one of the reasons here was just with this to bring up the volume through here as well. So we can see this move coming up through here, just a bit of education really, just market moving up through here. It's moving up, but the volume is diminishing, isn't it? So that's divergence. That's what you would see in indicators, but we're seeing it in volume terms here and price action through here. And we're seeing some nice volume come in here. This move up here is, counts quite nicely so we've got the A wave, the B wave, and the C wave here. Nice move up for wave 1. And we can see that this market in here is corrective, isn't it? It's corrective because it's got 3 waves, got overlapping wave structures. So really, we should be moving up quite nicely from here. So this wave 2 to wave 3 here should be longer than wave 1 here. So we should come up to 6.9, the old highs here, eventually, and yeah, wave 4 and wave 5 as it stands. Yeah, so that's what we're looking at there at this point. So let's just drill into this little section here now. This is what it looks like, quite clean here now. Clean in terms of, well, we've got this nice push up through here. Then we've got, most important, we've got 3 waves here. And then when this market moves up here past the 50% level between this high and this low here. So moving up beyond 50% of whatever that and that is here, it really throws the weight, shifts the weight to the upside. But of course, we like to work with numbers. So being above 65 here would put us on the long side here. So we are looking at this being wave 1 up through to here in 5 waves. And we can see here that a little bit spiky in here. I'll just see if we've got another chart here on this here. Yes, I have. I haven't really nailed it out just yet. But if I just zoom in here for a moment, we can have a look at this here. I would assume that this is wave 1 here. I haven't pulled it apart. Wave 2 here, and this is all of wave 3 here still going. So there'll be a 1 and 2 and 3 and 4 and 5 into here. So I'll just draw this out a little bit here. So this would be somewhere up here would be wave 5. So that would be 1, 2, 3, and then we'd see a wave 4 come back to wave 4, 1 lesser degree, and then we'd see wave 5 up through to here. Then we'd see an A and a B and a C that could come back to here, and then moving up there again. So this all depends on the ECB thing as well, you know, but this would be the structure that we're looking at here. Best to put wave 2 here, and best to look at this here just in case, but it might trip higher. So, you know, if I was trading this, the stop would have to go under wave 2 here, because at that point you would be, the count would be wrong at that point. Yes, it is a wide gap, but you don't have to make, you know, a lifetime amount of money in one trade. You know, it's just about doing it right. Okay, we've done the ASX 200, that's it. Now, I also want to say too that I'm not going to add text to the day ahead report anymore, because I feel like it's doubling up on my workload, and I'm better off using that time to spend more time on charts, be it on videos for the indices, the commodities, or the Forex, but I also would like to introduce some charts on stocks as well. Now, those charts on stocks may be done through the day sometime, but I want to put, I feel like I can make a better service if I not doubling up on my workload so much there. I can use the time more valuably, doing more charts, and I think that I'd like to do nicer charts on these videos and do some stock charts as well. Those stock charts could be in video format, or they could just be in charts, but they would be covering the London stock market, the US stock market, and the Australian stock market. All right, that's it. Thanks for tuning in. Cheers.